Well, how are you doing this morning? Happy Monday to you. I'm Marlon Bowling, your tour guide to the ag commodities. So glad you could join us today as we open up a new trading week. And let's take a look at what's going on with the market activity overnight. Let's begin with a look at our corn market, shall we? And on our quotes provided by Bar Chart, well, we have just a little bit of weakness overnight when we wrapped up the Globex trade. Not a lot going on here. It looks like we have the nearby December contract down 0.75 cents. We're at 6.89 per bushel. The March contract was down just 0.25 cents overnight at 6.96. Now let's take a look at the soybean market. What did it do overnight? Well, it kind of chopped around, to be real honest with you, and we had November with a high of 13.90, and it finished up at 13.87 1/4. Now it did have to bounce off of its earlier low last night by about 11 cents to finish up 3.5 cents higher by the time we got into our morning trade. Now, the January was up a couple of cents at 13.94 3/4. Actually kind of quiet here overnight in the grains. Now, on the wheat market here, you had a little firmer tone in Chicago. December was 8.5 higher at 8.68 1/4 here this morning. In Kansas City wheat, the hard red winter wheat, you had December 8.25 higher at 9.60 Meanwhile, in the spring Minneapolis wheat, you had December 7.25 higher at 9.61 How did we finish up in the cotton market overnight? Well, we had December 90 points higher at 84.05 per pound. I am joined now by Brian Hoops, the president of Midwest Market Solutions. He's in Springfield, Missouri. And Brian, let's take a look at this grain market activity today. We'll get our new crop progress and condition report later on today. But all in all, about the only thing anybody's going to look at is the harvest progress, right?
Hey, good morning, Marlon. Welcome back. Yeah, most likely that's what trade will be looking at real closely today. You know, we're getting some planting progress out of South America. Soybeans in Brazil about 20% done. The corn is advancing as well as corn in Argentina. And we're watching weather in South America real closely as well, because rains are in the forecast for Argentina, and that's something they badly need. So, you know, that's what the market is certainly anticipating, trying to look for harvest activity here in the United States to get to that 50% complete for corn and soybeans. That usually signals at least a low, at least temporarily. This week, you know, we have the crush report coming out today as well. It's expected to be a record crush for the month of September, around 161 million bushels. That's, you know, down from what we've seen last month in July or in August, but a lot of plants idle during this September timeframe for some maintenance. And then export sales again on Thursday is going to be a key number, I think, to watch real closely. We saw really strong private sales last week, and that indicates we should see some big sales of soybeans on Thursday morning, but probably not corn or wheat.
You know, overnight we heard news of advancing hostilities once again in Ukraine. It sounds like Russia is attacking key infrastructure points in Ukraine using Iranian-made drones. That's kind of a new development. And of course, in that case, then everything is kind of automated. They almost are doing a remote control war in this case. But we know that they had already hit one sunflower oil terminal, possibly other infrastructure locations as well. So widespread attacks. But the market seems to be kind of quiet on that front. Now, however, I do want to take a look at the Dow Jones Industrial Average. And of course, I believe we're kind of in the middle of our reporting season, our earnings reporting. In December, Dow futures 407 points higher, Brian, at 30,115. So they jumped up over 30,000 again. And on the dollar value, the U.S. dollar index, December futures down 797 points. We'll call it 800 lower at 112.405. Well, if that's the case, what kind of influence will these markets have on the grains?
Yeah, you know, you look at the dollar weakening here overnight. That's certainly, you know, supportive for our markets. We talked about exports, and this is really the key time frame. We need to be exporting some product. One of the problems is our dollar is so much higher than what it has been historically that it makes our products more expensive. You know, for example, you go out into January, Brazilian soybeans are offered $2 a bushel cheaper than what they can buy U.S. product for. So it makes a big difference with the dollar being as strong as it is. Corn is about $1 more expensive to buy from the U.S. So, you go out into those winter months, demand's really expected to slow down unless they have a drought and they just don't have any product to sell or the dollar really breaks. So we'd love to see some more export business, but there wasn't anything this morning to report. And inspections numbers that we've seen here recently have been pretty decent for wheat and kind of tepid for corn and for soybeans.
And another thing we have to watch is barge traffic here in the U.S. getting at historically low levels right now due to low river levels. Well, Brian, we'll come back in a moment and we'll analyze our livestock trade to open up the week when we come back. Well, we're back with you, and we are talking with Brian Hoops, and he is with Midwest Market Solutions. So on the livestock front, with everything else going on here, Brian, what are you going to be watching for to start out the week?
Well, in the hog market, the thing is traded so technically, we continue to push to new highs, and that gives you additional technical buying. So if we're able to take out Friday's highs, probably quite a few buy stops above that level, and we could see the market continue to push higher after strong gains on Friday. The cattle market this week, cash is called steady to higher once again. We've seen about $1 higher trade the last couple of weeks, and we're looking for additional gains this week. There's also a lot of talk about the product trying to bottom, which would really be a benefit for the packers. Their margins have really gotten squeezed here recently. Last week's kill was expected to be a little bit smaller, maybe around 630,000 head. That was what the industry had thought going into the week, and it ended up being a very strong 660,000 head kill. So there's still very strong demand from the packers. They need cattle, and that is one of the reasons why we're looking for cash trade to be $1 higher once again this week.
Well, let's take a look at that livestock summary then from last Friday, and actually that kind of includes a little average of the week's totals. But as we wrapped up the week, it looks like we had live cattle sales out there in the country, maybe around 145 on average. Didn't seem to move too much. I guess that'd be $1 higher than the previous week. Dress basis sales, we had them anywhere from 230 to 234, as much as I could tell. And we'll call that steady to higher, maybe a couple of bucks higher on the upper end of that range. On the carcass basis hogs around the country, they were down $1.46 in value Friday. That would have been at $87.80 per hundredweight. When it comes to the beef cutout values, we had choice and selects both higher on Friday. We had the choice going up 45 cents. Selects were up $1.08. So they finished up on an upward note. Let's see where we closed up last week here on the live cattle board. And here, just for a point of reference anyway, we had the October up 50, but December finished 15 lower Friday at 147.77. Meanwhile, on the feeder cattle market, we headed into the weekend with October down 95 and November down $1.32 at 174.77. Meanwhile, on the lean hog market, we finished up Friday's trade with December $1.65 higher at 82.25. We'll see if they can get any follow through to that on today's trade. So, Brian, thanks for helping us navigate the open here this morning. Always good to talk with you. Appreciate it. Brian Hoops of Midwest Market Solutions. So, Janet, the table is set. We are about ready to kick off.